Very good morning to you guys. Hope you're doing well. We are the 1st of November now, so we've got a new month. We've got FOMC tomorrow, and we've got NFP, and we've also got the BOE as well on Thursday. So be careful around the pound on Thursday. Risk calculation is on at the big picture and at the 24-hour change. The VIX has been quite subdued. It didn't really do that much yesterday. We did have a bank holiday in the UK. And I think we're All Saints Day in Europe as well. So it might be a bit of a quiet affair in Europe. And you can see how the bubbles are orientated. They're bunched up with Aussie, yen and Swiss. So I'll probably try and avoid Aussie yen, for example. But you might want to trade the Kiwi. You might want to look to sell the pound potentially. Because this is the strong sell quadrant. This is the strong buy quadrant. So you try and pitch strong versus weak. And risk calc is on, so long Kiwi could be good because it would agree with the sentiment. So that's that. And the yields rose. And now the thing is with the yields, we've got the 3-month and 10-year inversion. The 3-year is now yielding more than the 10-year. So that's risk off. Okay, so traditionally speaking, this is a risk off sign. We have known markets to ignore the yield curve inversions. They did prior to the COVID crash. We had inverted then, and then we had the almighty tumble on risk. So be careful because we've got the FOMC tomorrow, and these are going to change dramatically according to what Powell says, and big moves as well. So ideally we want these down if we want risk on. Okay, so but we've got the inversion here. So this is a bit of a sign. Whether or not the markets will ignore it. They have done, but they did, and then they paid for it. You know, the COVID crash. We had inverted, and then a couple of weeks later, the Wuhan story came out. So it might be a case of them having to invent a scary story in order to, flush the retail guys out. But we can see the retail guys are caught short by that metric, -5. Okay. Could be a little bit further away from zero, but they are trapped now, so they might not have to invent a scary story, but these do need to come down. Maybe if the Russia-Ukraine thing de-escalates, it's going to help, and of course after the Powell speech, then we'll have some bit more clarity as well. And then we've got NFP on Friday, so it's going to be a roller coaster week. France 40 was the big mover. AJ was a big mover, and so was oil. The US indices didn't really move really much from last week, which is quite interesting. Weekly majors, so they're trying quite heroically to fight the USD. Look at the month now, it looks quite good. A bit of a dollar weakness. However, that doesn't tie into what we're seeing here. These pumping would support a stronger USD, so we might be setting up for a sell-off on these instruments at FOMC. All depends what happens with the yields. We don't really want to see that yield curve inversion of the 3-month. 3-month is a worry because this is near term. Okay, we don't really want that above 4%. So yeah, a bit of a tricky one whether or not we want to be buying versus the USD. It's a bit risky because, the big picture is that we're quite rosy. It's quite strong. Kiwi USD is the strongest and dollar CAD is the weakest. That's fine. We need risk on for that. So be careful. It can flip quite quickly, as you know. In 12 minutes, we've got the London Open. We might be risk off. We might be risk on. You have to check your risk and check your VIX. Check your indices, and the level that I would be watching for risk appetite is 3912 on S&P. Now the reason for it is a double top that we formed yesterday, and we've got a swing low, which is a support, and it was resistance. You can't really see that line, but there's a line that actually goes along and it hits the double top. So there could be a decent technical resistance. Sentimentally, it's a buy. These guys are going to potentially sell it. If we do, we'll break that resistance. if they go long, will fall. So it all depends what these guys do, what if they buy or sell, and then we see how the price, how it inverted. See, that they sold it, so calm, and they went long, so we fell, and then they sold it, then we come up, and it happens all the time. So they sold it, I'll be calm, they sold it here. Now what's interesting is here, this was price action derived, this was the driver for that. However, there isn't any reason for them to short it here, which is unusual. So I think it must be news related, because the price action doesn't warrant them to short, price is going up. However, on this wick, see that wick above, it was a lot of selling pressure that caused them to sell. Of course, the next hour we rebounded. So this is price action. This is probably news, but I'm not sure what the news is that caused that. DAX has been a beast. So there's them selling it, and there's a huge candle on the hourly. Up we come. And gold, now we had moved a lot. We moved to $6 in 15 minutes on gold, and the stop loss cluster is fairly close. So I was wondering whether or not they want it a little bit larger before probing, because it's only 1% in size. They might want it a little bit larger, so it might come down a little bit just to tease them, encourage some more shorts, and then that size will get larger, and then we can probe those stops. So sometimes that happens when the stop loss cluster isn't that large. They'll just wait, and it's a bit like feeding a chicken. For your evening meal, you could eat a chicken that isn't well fed, or you could feed the chicken and you have a nice meal. So it might be something like that, with some kind of strange psychology going on. Well, it makes sense. It's not necessarily strange, it's quite logical, but quite cruel as well. So yeah, that's possibly what's happened, is that big tumble was just because they didn't want to get the stop loss cluster right now. They're going to wait for that to get larger. However, they did sell it, so we can come up sentimentally. And loads of stops we got triggered, and I lost count how many stops got triggered. So this is subject to change within an hour, really. So do get a copy of the FX SSI indicators, and then you can see the stop loss clusters and you see how they're dynamically changing. Note where the Euro USD is, it's at parity. There's the Quasidb code if you want to get access to the suite of indicators at a 10% discount. So, you click that if you like, and you get discount. But you do note that this is subject to change. And by the time you see this by New York, this would have all changed pretty much. Maybe some of these, these wide stops might be safe, like EU, for example. And a lot of mismatch as well. A lot of mismatch. Yeah, dollar yen. But I just posted some dollar yen analysis in the Discord, so have an eye on that. We have got monthly pivot as resistance, so technically speaking, if we're below monthly pivot, technically bearish. That's fine. Euro needs to just reverse a bit, and yen needs to behave a bit better. That's fine. And EuroCAD, we had a 79 pips, and it got to target. And considering the absolutely horrendous price action these days, I'm quite happy with the result. Normally, when we have a TP, it won't get to the TP. It will reverse and go to our entry, and then we'll get out a break even. It happens so much because of the chop, and I think it's a lot to do with the huge influx of retail traders. It's causing a lot of volatility, especially the apes as well. And I'm not sure, because it seems like trading has become harder over time, where in 10 years ago when I started, you could put a TP at a place and it would probably get there. But now what happens, it does this like EPG heart rate monitor thing, and it just gets you out, it chops you out. So quite happy with that. That's quite good. If we have another positive day today, then that's going to be awesome. Be careful here. Be careful here. But the thing is, it does agree with the bubbles. The currency pair itself agrees, and technically summary is fine as well. But just be careful. Don't necessarily have to take that. Just maybe just keep an eye on it. Economic calendar, RBA was slightly disappointed. We've got lots of PMI, so be careful with the trade of the day because it's got pound in it. We've got the PMI from Canada, we've got the PMI from the United States, and jobs data as well, and then we've got Kiwi data. Keep calm, always trade safely, and especially this week because we've got FOMC, and we've got NFP, and we've got the BOE, and we've got lots of PMI data today as well. And I think this was what's happening in gold, is just waiting for that stop loss to get larger, and it probably doesn't want to freak them out too much, you know. I don't know. It moved $7 in 15 minutes, so we might just see more horrendous chop. You can see how horrible it is to trade. And don't forget the COT data was fairly negative on gold, so that's like the big picture view. Be careful, and I'll speak to you guys soon. I'm going to do a quick 2-minute video in Discord, and we can cover the indices a bit closer, and we can see what's happening with the sentiment.